Welcome to our first ever Amazing Blocks podcast, Tokenizing Everything. My name is Nicolas. I will be your host today. Our guest today is DLT Capital co-founder and Amazing Blocks sales advisor, Sergej Stein. He has a tremendous experience in the blockchain space and is considered a true blockchain enthusiast. Today, we will discuss the topic of tokenization with a special look at Liechtenstein and the current jurisdiction there. First of all, I have to state that all opinions in this podcast are solely personal and do not reflect the opinions of Amazing Blocks or any other involved parties. So let's start. Welcome, Sergej. How are you?
Hey, Nicolas. I'm good. How are you?
Yeah, I'm good too. I think everybody's a bit busy right now or stuck with lockdown, but yes. I'm good so far. So let's give our listeners a brief introduction to who you are and what is DLT Capital.
Sure, Nicolas. Thanks for this opportunity. As you said, my name is Sergej. I've grown up in northern Germany and in Schleswig-Holstein. Basically moved to Hamburg to start my first ventures and e-commerce in the B2B space. Used to live 5 years in Hamburg. Those very first ventures also failed, obviously, due to the lack of experience and maybe also lack of funding back in the past. Then I decided to move to Frankfurt in order to pursue my studies in international business administration at the Frankfurt School of Finance and Management. At that time, I basically had this idea of having a career in investment banking back then. Luckily, in 2016, I came across a technology called Ethereum back then, which got me super excited, obviously. And in 2017, I joined the first venture on Ethereum, which was a P2P lending protocol, basically. And also during this ICO craze, we kind of managed to raise $60 million back then, very successful ICO. This got me even more excited to dive even more deeper into it. So I decided then to create my own corporate finance blockchain advisory, which you already named, DLT Capital. And since then, we were advising a variety of startups, but also invested myself in different ventures. And yes, this is what I did.
Yeah, very impressive vita there. So, I mean, it really shows that you've been into the blockchain space also prior to the ICO craze. So in the early days, I would say. Right. So what was the first true experience with blockchain technology and especially Ethereum that you personally had? But what was the moment that kind of really convinced you? I mean, a lot of people in the blockchain space always talk about their wow moment. I mean, for some, it maybe was CryptoKitties. For others, it was actual true technology that can be leveraged in a positive way, also to enhance society and for the financial structure and other, aspects in our business world. So what was this moment for you that really got you into this space and convinced?
Yes, definitely. I think there were at least two wow moments back then. I mean, the first time I read about Bitcoin in 2012, I kind of missed the opportunity back then, just heard it is kind of this criminal internet money. But once I started to dive into those protocols and the technology behind it, I realized that there's a decentralized money infrastructure out there that is basically tamper-proof and trustless, where nobody can interfere. And this is something extremely unique, which we haven't seen so far. But once you dive even deeper into those different protocols and understand different governance models, you basically also understand that there is much more than just this decentralized money. You have a lot of more opportunities, such as creating supply chain on the blockchain, also healthcare use cases, and a lot of different things, even up to political voting, stuff like that. And yeah, we haven't seen something like that before. So this got me really excited.
Yeah, I think it's very, it's great to see how many different sectors blockchain can disrupt in the future. So now you're an established blockchain entrepreneur. What is your experience with this in this space? How can you tell our listeners a bit how it feels? What maybe differs from the traditional sectors so far? How is the blockchain space evolving as a whole for entrepreneurs? How does it feel for you personally?
Yeah, it's a good point. I mean, it is quite different, to be honest. It's a very fast moving space on the one hand, and there are just so many different technologies and innovations coming up every year. It's very difficult to catch up most of the time, but you kind of need to understand the ground basis, blockchain, DLT, let's call it that way. And once you understand that, basically, it's much easier. But from the startup perspective, I mean, we have different fundraising models. We have seen ICOs, we have seen, which is called initial coin offerings. We have seen STO, security token offerings, and also different valuation models. I mean, how do you value basically assets on the blockchain? What kind of models do you use? DCF most of the time doesn't really apply in those kind of situations. So there are different challenges that are definitely coming up.
Okay, yeah, I agree. I mean, as blockchain is evolving and going into the different sectors, obviously there's going to be obstacles to surmount, but also new innovations coming up. And I think some of the best or the most auspicious innovations are smart contracts, in my opinion, personally, and also tokenization. So can you tell us a little bit about how these two innovations kind of combine on the one hand, and what kind of sectors these innovations will disrupt?
Yeah, definitely. I mean, as you mentioned, smart contracts are one of the most important innovation in the blockchain space. Specifically, it happened the first time on Ethereum. Those are basically programmable conditions. And in the financial sector, they're especially useful. I mean, you can create stuff like stable coins, for example, but you can also tokenize a variety of assets, everything from stocks, derivatives, real estate, collectibles, and so on and so forth. And yeah, this is due to smart contracts and those basically decentralized kind of rules that you can create on top of it.
Yeah, and what brought us smart contracts? I mean, you mentioned it already. Ethereum obviously is the core driver here. I'm sure there's a lot of copycats now out there, but Ethereum is obviously the largest community, and I guess community is a crucial factor in the blockchain space. So can you tell us a bit about the current state of Ethereum in your personal opinion and the challenges ahead with the upcoming switch from proof of work to proof of stake?
Yeah, absolutely. As you mentioned, Ethereum is one of the oldest blockchain that implements smart contracts kind of successfully. They use this consensus algorithm, proof of work, most of the time, the same that Bitcoin or similar to what Bitcoin uses. Now they are switching officially on the 1st December to proof of stake, which is the phase 0, the beacon chain, which enables staking. We have been long time waiting for that moment, and it's finally happening. It makes Ethereum much more scalable. I heard in the beginning up to 100 times more scalable due to rollups, and later on even up to 5,000 times more scalable, where you have up to 100,000 transactions per second. So this is something that we definitely need, especially when it comes to financial transactions. If you want to have something like decentralized exchanges that do trade, let's say, security tokens on top of it, you need a high throughput. And we have seen the problem with DeFi right now, where transaction costs were spiking because Ethereum basically kind of, yeah, was congested most of the time. And we hope that it will be solved this time.
Yeah, I mean, it's funny that you mentioned DeFi. We will definitely talk about this a bit later on. DeFi is a hot topic in the blockchain space, but let's continue a bit more with the influence. Well, what do you see? Do you see DeFi? Do you see tokenization as the core driver of Ethereum, or what is your opinion there? And how will the switch from proof of stake, from proof of work to proof of stake, kind of enhance the current adoption in terms of mainstream adoption of blockchain and tokenization in general?
Yeah, I mean, I think tokenization, and if we talk about tokenization of assets, or this podcast is called Tokenization of Everything, literally, we talk about a lot of value. I mean, for example, the derivatives market is up to $500 trillion worth, stock market worldwide is up to $100 trillion worth, and collectibles, for example, $500 billion worth. So there's a lot of value that could be tokenized in theory. We already see this happening with different applications, but we still have the problem that Ethereum uses proof of work and it's sort of slow. So sometimes technology providers use sort of hybrid blockchains or private, semi-private blockchains, not really Ethereum so much. And we hope that this is going to change. I mean, Amazing Blocks obviously is on the public chain of Ethereum, and we definitely need proof of stake to happen in order to be super scalable at the end of the day and really see financial transactions going through this blockchain.
Yeah, I mean, tokenization of everything as the topic of our blockchain kind of already shows the potential that tokenization has in the future in terms of kind of, creating a digital identity for real world assets, for just real world rights, for just about anything. to kind of have this bridge or this merge between the digital world and the traditional world of finance and traditional world of business. And so what do you see as the current pain points that are still harming, the acceleration of the tokenization sector, which by 2027, according to multiple reports, is set to reach trillions of dollars, even potentially. But what do you see as the current pain points that are still holding this sector back?
Yeah, I mean, there are different points for sure. I mean, first of all, we need more clarity when it comes to regulation, right? I mean, we have seen different types of regulation in Germany, but also in the European Union getting released, not really released, just very first drafts, like the MiCA regulation, which kind of differentiates between the stable coins and kind of more regulated tokenized, let's say fiat, something like CBD and so on. So we need more regulation, more clarity around this, but also, as we already said, Ethereum and other technologies need to become more scalable in order to have more adoption. So those are kind of the main pain points. And also companies need to invest a little bit more into this industry, and they need to try out more MVPs or more tokenization projects at this point. We don't see it too much in a too large scale, even though the first institutionals obviously are getting into it in the first banks. So
yeah, I mean, I think the one of the core factors that is kind of slowing down the progress, I think, as you mentioned correctly, is the jurisdictional part. Because sure that you are able to tokenize bonds in some jurisdictions, you're able to tokenize participation certificates. However, there's barely any chance to tokenize through equity, because I think this is when you are able to tokenize through equity, this is going to be one of the killer apps for tokenization in terms of actually people seeing the potential use cases inherits. And because you cannot only tokenize shares from traditional companies like bearer shares or registered shares, but you can also kind of create whole new asset classes for illiquid assets like real estate or patents, art even, and therefore you kind of create like a so-called token economy. So do you see a special jurisdiction out there so far that is kind of fit or already ready for this token economy that is emerging in the age of Web 3.0?
Yeah, definitely. I mean, I would say there are a few jurisdictions which are kind of blockchain friendly, but obviously we at Amazing Blocks, we picked Liechtenstein a year ago, since we saw that with the Liechtenstein Token Act, which has been released in the beginning of 2020, that it basically allowed to tokenize or to put any right into so-called token container model, and basically to have a full token economy in the real sense, where you have a lot of possibilities, most possibilities right now completely untouched. And one of the largest markets that we are kind of also touching right now at Amazing Blocks is the tokenization of equity, obviously, something that is not really possible at this point in Germany or in other jurisdictions. And so Liechtenstein is really sort of at the forefront of innovation in terms of regulatory innovation at this point.
Yeah, and I think Liechtenstein is a true pioneer in the regulatory space, and a lot of other jurisdictions are actually taking note of what Liechtenstein is doing. A core issue that people see with security tokens is passporting, for instance. Can you tell our listeners a bit more about the special situation that Liechtenstein inherits in this particular aspect?
Yeah, for those people that don't know, I mean, Liechtenstein is kind of part of the European Economic Area, but also part of the Switzerland, or also deeply connected to Switzerland. So basically, you have those connections of both sides. I mean, Switzerland, we know there's the crypto valley, and it's kind of considered the Silicon Valley of Switzerland, basically. But also you have the connection to Germany and many other jurisdictions. So Liechtenstein kind of uses the euro, but also the Swiss franc, and has the best things of both worlds, more or less. And this makes things like passporting obviously much easier. If you want to issue a public offering, a security token offering, for example, or even an equity token offering, you can do the passporting into a variety of European countries. Yeah, way easier than it would be if you're kind of registered in Switzerland, which are actually a lot of companies and foundations are in Switzerland, right? The Ethereum Foundation, Cardano Foundation, many more. So being in Liechtenstein has really this advantage of having both worlds.
Yeah, I agree with you completely. Liechtenstein is kind of, a special place. Sure, it's an inconspicuous country, and some only kind of connected with skiing or mountains and things like this. However, I think from a business perspective, and especially from a blockchain perspective, it's a true hub here. So Liechtenstein as a true hub, and Amazing Blocks being one of the first ever to leverage the Liechtenstein Token Act that was implemented in January of this year. Can I tell the listeners a bit more about the special role that Amazing Blocks specifically inherits in Liechtenstein?
Yes, absolutely. So we recognized at the beginning of this year, or even much earlier, that Liechtenstein will have this law, and we need to create a solution around it, right? So this is when we started to develop, first of all, our tokenization solution, which is called TokenPad, where you basically can issue shares on top of the Ethereum blockchain using the Liechtenstein Token Act framework. Let's put it that way. And also currently working on an extension of our platform where you can basically onboard investors and have public equity offerings, for example. And we got everything approved by our partner, our law firm Nicolas. So our solution, our tokenization solution, is basically ready to go and compliant with the regulatory framework of Liechtenstein. So we really want to make this sure that everything is it's basically possible with our technology.
Yeah. So let's just dive into the equity token aspect a bit more here. So just for our listeners a bit, how can they imagine, how does it usually look like if you tokenize equity in Liechtenstein? Say, when you go to Liechtenstein and you want to say tokenize, for instance, a classic car, or you want to tokenize a machine, solar panels, and so on, how would you approach this?
Right. I mean, as you correctly mentioned, there are a variety of use cases tokenizing classic cars, which is a very exciting one at this point for us. And I mean, the comparison to Germany is always, in Germany, you would need to go to a notary, right, to have a very lengthy process, a very manual process in order to set up a company. And then you have your startup or whatsoever, but you still cannot tokenize that company. In Liechtenstein, it's possible. You don't even need to go to the notary. You can establish it completely remotely and digitally. And even putting classic cars, as you said, into the stock company, it's the Aktiengesellschaft, the AG in Germany, and basically selling shares of a classic car, I mean, which we haven't seen before yet. Most of the time, they are more in other jurisdictions, they are structured as participation rights, it's kind of the debt side, but here you can really own a share of a classic car. You can actually even have ownership tokens, which is also possible by law. Not super practical at this time in other jurisdictions, but it's basically possible and doable, and hopefully we see other jurisdictions following suit at some point.
Okay, and say I have an AG, like you mentioned, in Liechtenstein. So and I want to tokenize my own company shares, and also I want to tokenize assets that are owned. Is this possible, and how will this look like in Liechtenstein?
Right. I mean, once you set up the company, and by the way, you can do it in means of a crypto transaction as well. You can use Ether, which we did at Amazing Blocks ourselves. So putting Ether onto our hardware wallet and showing it to the share registry, basically, and founding the company then. But once more, the AG or the stock company that you tokenize, it's equity, and then you could basically have some sort of a buy agreement to buy, let's say, classic car real estate, and that way you would own those assets in your company, and you could also issue more shares on top of those assets then. So this is the full circle at the end of the day.
Okay, and then this is very, very interesting. And is it also possible, say, if I want to tokenize equity of classic cars? Let's just stay with this point for a bit. Say, can you also then offer this classic car equity, of course, to investors on the one hand? But is it also possible to say, okay, and this is what I read, that it's also possible to say, okay, you tokenize the equity, and then on top of this, you issue additional, for instance, coupon tokens, which allow you to basically drive this car for amount X of days, and then you can basically have like a passive income. Do you think that this will be kind of a great alternative to traditional investments, because it kind of creates a more stable income, a passive income, so to say, without having to risk, too much?
I mean, this coupon idea is definitely an interesting idea in a sense, because you also allow the investors to basically use those cars, you know, and the usage is kind of represented in those tokens. And also, as you said, it's an additional income or passive income purpose for the company, for the classic car company. Yeah, I mean, you could issue a lot of more use cases on top of that. So I think this is a very interesting time to try out those things, and I'm pretty sure we will see it in the near future.
Okay, yeah, it's very exciting. And say, you know, like, can you kind of guide us through the process when I'm a customer of Amazing Blocks, and I want to set up a legal entity in Liechtenstein, and I want to tokenize it, and then I want to subsequently also tokenize assets. What you know, which steps on the way are kind of covered by Amazing Blocks? How does it look like? How does this process look like from a perspective of steps that I need to take as a client? And also, is this a process that takes long, or is it a short process?
Yeah, it's a good question. I mean, I won't go into every individual step. I'm happy to share more about that in a, you know, during a personal call if somebody's interested to know more. But basically, you can reach out to us. It's either via the website or via email or maybe via other means. And one of the very first steps is basically, once we identified what kind of company or what kind of assets you want to tokenize, we usually reach out to our law firm, law partners, to also kind of make you an offer and tell you the pricing of the foundation of the company. And more or less, most of the process steps, we kind of have a guideline that we show our customers what are the individual steps and which week he needs to do. And we provide all those templates. So it's very, very easy in the sense that everything is kind of prepared. The customer just needs to fill out those templates, the articles of association and so on, send it to the law firm. And within 3 weeks, he basically has this company set up. So this is kind of the best case scenario, let's say.
Okay, and once the company is set up, the software for Amazing Blocks can take care of the issuance part and therefore the minting of the tokens. Where you mint the tokens and then you basically send them to the whiteley listed Ethereum wallet addresses. And I think a core aspect here is also to mention that Amazing Blocks has a digital share register and therefore complies with the FMA in Liechtenstein. So, but on top of this, also other management tasks can be fulfilled, obviously, and also from the investor's perspective. So what do you think in terms of financial inclusion? Can this model of equity tokens inherit, especially for startups, so that they can actually also address retail investors more specifically, and retail investors also now have the chance a bit more to participate in early stage companies than they maybe have had before?
Yeah, I mean, you're totally right. This enables so many opportunities, especially the equity part of it, since you can issue kind of tokens the way you want in a way, or as many as you want. You can obviously onboard retail investors to your own company. I mean, usually most of the time retail investors either invest through crowd invest platforms or through other means, but also they don't really have access to those kind of investments most of the time. So imagine you're tokenizing a VC fund and creating or issuing equity tokens. Through our platform, it would be very straightforward. And for the first time, retail investors could actually own real shares of a VC fund. And we haven't seen this before. And as you mentioned, we have so many options with this platform, basically having general assemblies. You can have fundraising on the go, so you can make everything digitally and remotely, just because those equity tokens allow you also to have a certain governance model to vote on certain decisions within the company.
Okay, yeah, this is just a broad perspective. I would say every step of the way, every part of the life cycle is kind of covered by this solution. Right. So if someone is still not convinced by all the great points that you mentioned, so how would you address a person like this?
Yeah, true. I mean, first of all, if there's still blockchain skeptics in a sense, try to get involved. I mean, try to invest maybe a little bit of money, even though I need to say this is not investment advice from my side, but you can basically already now invest into security tokens. There are a few projects out there. There are a few projects raising. If you're interested in tokenizing yourself, you can reach out to us. We actually have demo version that we can showcase to you, just for you to see how it works in real time. And yeah, and then we can also tokenize your startup the next time, or your real estate, or whatever you own. So
yeah, then I think hopefully that people will actually see the potential this inherits, and not only from the perspective of kind of integrating the traditional world of finance into the blockchain space, but also in the future. For instance, when we look at one of the hottest trends in the blockchain space right now, DeFi, decentralized finance. Do you see these two, these two trends, these two killer apps of blockchain, decentralized finance, and tokenization kind of merging in the future? And if so, what are the potential, synergies that may come up from this?
Yeah, it's a good point. I mean, decentralized finance, it's really incredible how much the space has grown over the past year. I mean, it's now roughly $16 billion worth, I think. And I think one of the largest assets is actually wrapped Bitcoin. So it's kind of Bitcoin within the ERC20 token. It's actually also a form of tokenization, if you want, right? And something that institutional investors obviously also are interested in. And yeah, DeFi is already merging, I think, with tokenization. I mean, we have something like synthetic assets, we have something like insurance products on top of it, and we will see many, many more use cases. We will see decentralized exchanges also for security tokens in the very near future. So those spaces will merge, and it will make it more exciting, more innovation will come out of this. And as you said, not just putting the traditional infrastructure on top of it, which is obviously also kind of needed and large in terms of dollar value, but seeing new products actually appearing. That's more exciting, I think.
Yeah, it's definitely, I think, one of the most interesting use cases here is using tokenized equity, for instance, of an asset like real estate as collateral. On top of these DeFi, or locking it as collateral into these DeFi protocols. And also, what I think this whole tokenization sector can bring to DeFi is liquidity. Can you tell our listeners a bit more how actually tokenized assets and tokenized equity in general can provide liquidity, and why liquidity is so much needed in the DeFi sector?
Yeah, you're right. I mean, we have seen those kind of things like liquidity mining from a variety of let's say, DeFi coins, but usually there was no real value, in a sense, kind of coming out of it. So once you put real life assets such as real estates or other things on top of DeFi applications, you actually have interest rates or yield coming from products or assets from the real world, where there's some real demand, borrowing and lending going on. So this is what you need. And yeah, as you said, institutional investors are kind of hungry for that. So this is where probably also the liquidity is coming from. We know that the lending market is an extremely large market. So once we put this on top of DeFi with real value or real world assets, this whole space becomes more mature and also probably more de-risk over time.
Okay, yeah, and I believe that kind of these two these two industries will grow dually and simultaneously, and kind of complement each other on their path to disrupting the current traditional finance sector. And last but not least, about DeFi, what you mentioned earlier are governance tokens. So governance tokens, for those that don't know, are tokens within these DeFi systems, or generally blockchain protocols that have like certain roles in terms of voting on the democratized system. So how do you see these governance tokens in comparison to equity tokens?
Yeah, I mean, I think we briefly talked about it already. I mean, once you own equity tokens in a company, you can do voting within a company, basically, as long as your shareholder agreement kind of allows for that, right? So equity token, in a sense, are also governance tokens, but really focused on equities or different types of assets. So I see there the connection, in a sense, and I think governance tokens and equity tokens are extremely important in this space and of high interest for everyone. So.
And what is your take on the jurisdictional aspect in regarding the true governance tokens? Do you think that jurisdictions will kind of adopt their laws to kind of have them in a similar role in terms of, from a legal perspective, like equity tokens, or do you see still the divide too huge between their regulatory aspects?
Right, I think it's going to be, or it is, an own token form, basically. I think governance tokens, most of the time, those are just simply the native tokens of a certain protocol. For Ethereum, it's Ether. For Cardano, it's ADA, and so on and so forth. And they are already regulated in their own sort of way. So you probably cannot. So governance tokens are not security tokens. They're not securities. So they have their own sort of framework.
Yeah. And this, I think, is the core benefit, of the Liechtenstein jurisdiction, where we can have these equity tokens, which from a technical perspective behave or can behave in the same way that these governance tokens in blockchain protocols behave, with peer-to-peer trading and so on, and 24/7 availability to trade. But however, the huge or the major differences are the KYC and AML aspects. So how is KYC and AML, just to wrap this up quickly, how is KYC, improved in the Liechtenstein jurisdiction in terms of allowing, for instance, ownership transfers of equity tokens?
Right. I mean, I'm not sure how it has improved over the last years. I'm just aware that Liechtenstein has basically 4 different levels of KYC, depending on how wealthy you are. Let's say the more wealthy, the more sort of you need to prove where where the source of the funds is coming from. But more or less, I think KYC is quite standard, also similar to other jurisdictions. So I mean, I don't see there any hurdle or whatsoever. It's just pretty much the same as we have. I mean, we obviously, with our platform on Amazing Blocks, we can do KYC manually. You can just upload all the information. You don't need like a third provider necessarily in order to do that. That's a beautiful thing.
So you basically do not need to go to an intermediary to kind of have this transaction of equity. Yeah, this is very impressive. Yeah. So last but not least, something that I think is quite an interesting question. Where do you, just out of the blue, where do you see blockchain and tokenization, especially in say 10 years from now?
Right. I think in 10 years from now, tokenization will be probably adopted by 50% from most traditional finance industries. It will be probably the standard, not the exception. So most companies will sort of tokenize their assets in the future. And after that, other industries such as supply chain, healthcare, and so on will follow suit. But also, even within the next 2 to 3 years, we will see a lot of movement happening in the tokenization space as we see it right now.
Okay, so Sergej, thanks for being here today. I really enjoyed our discussion regarding the tremendous potential that tokenization and blockchain in general inherits. It was great to have you, and I think everyone listening learned a lot today regarding the special role that Liechtenstein inherits in this disruptive journey for mainstream adoption and real world use cases, especially for blockchain. So yeah, I really enjoyed having you here, and see you soon.
Sure. Thanks for the opportunity, Nicolas. Have a good day.
You too. Bye.
Bye-bye.
So to our listeners, thank you for attending this great podcast. If you want to get in touch with Amazing Blocks and what we do, feel free to connect with me on LinkedIn, send me an email, or just visit our website and go to www.amazingblocks.io and just feel free to reach out and fill out the form and request documents, so we can definitely get back to you and schedule a call. Thank you for listening.